Hello traders, Gary Wagner here. It is 11:29 in Honolulu, 5:29 in New York on Thursday, 5th day of May, 2022, and this is the Daily Report for gold and silver. To say that the financial markets had extreme volatility and extreme price reversals over the last 24 hours would be an absolute understatement. That with the exception of gold. Gold today is currently fixed at $1,877.20. It's showing a net gain of $8.40. But as I address in our opening letter, that's a little bit deceiving because New York closes before the FOMC meeting concludes and they release a statement coupled with Chairman Powell's press conference, which had a dramatic effect across the board in all of the financial asset classes. Yesterday, we saw extreme dollar weakness. You can see that on this daily chart, the red candle preceding today's upside move. And today we had a 180-degree reversal with the dollar gaining strength just about a gain of 1%, 103.575. Similar reversals in U.S. equities occurred today, with the S&P 500 yesterday gaining approximately 3% and today losing about 3.56%. In fact, in yesterday's gain, 95% of the stocks that compose the S&P index showed gains on the day, whereas in today's trading activity, over 95% of the individual stocks in the index showed price declines. The same can be said for the NASDAQ Composite and Dow Jones Industrial Average. Considering the dramatic price reversals that we witnessed in the dollar, yields in U.S. debt instruments, treasuries, and bonds, as well as U.S. equities, gold was exceptionally resilient, actually showing a small gain. And when we factor in today's dollar strength, which was just about a full percentage, and the fact that gold gained about a 0.5%, it really underscores that gold was the only asset class really to not experience a tremendous 180-degree key reversal. And when we factor in extreme dollar strength today, we can really see how strong gold really is. I've put up the Kitco Gold Index, which looks at spot pricing and separates the net change of dollar strength or weakness as well as the net change due to normal trading. And as you can see on today's screen print, we have a fixed price of $1,878.20, which is a net decline of $4.10. However, on closer inspection, you can see the dollar strength really took gold prices down to the tune of $18.25, and normal trading shows that buying was present in the market, bidding it higher to the tune of $14.15. So even though we're seeing a net decline in spot pricing of about $4, the truth of the matter is it was able to almost completely overcome dollar strength in the case of today's trading activity, and that is absolutely an expression of the resilience we are seeing currently in gold prices. That being said, we were neutral going into the FOMC meeting. We've maintained our neutrality with no active trades in gold or silver, and I believe our best course of action is to continue along those lines. I still believe we need to let the dust settle. On a preliminary basis, I do see some real potential for support coming in at just under $1,860. That is the low that occurred 3 days ago on Tuesday, and that also relates to this top that occurred, I believe, in January at the beginning of this year. Yesterday and today we have closed under the 100-day moving average, and effectively I would like to see a solid close above that before we consider re-entering the market. But I do believe there is a case to be made that there is a base forming that could result in support coming in at these recent lows of approximately $1,860. And of course, that would signal a conclusion to the recent decline in gold from $2,003 per ounce to under $1,860. In other words, a $140 price decline. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.